Yo, what is good? We're back with another video. We're going to be going over fair value gaps and how to understand fair value gaps better, because if we know the market, if you watched the last video, we know we rotate from external liquidity to internal liquidity, and internal being fair value gaps, external being old highs and lows. I just recorded this video for 20 minutes and my mic was muted, so let's get right into it. I just made a free Discord, so if you want to join that, it's in the link below. Other than that, let's get in the video. So first off, what is a fair value gap? A fair value gap is a 3-candle pattern. Whenever the first candle's low does not violate this candle's high, the third candle's if we are bearish. So right here we have a bearish fair value gap where this candle's low does not overlap with this candle's high, bearish fair value gap. Bullish fair value gap, this high does not violate or overlap with this candle's low. Bullish fair value gap here. So the point I want to make in this video is how to understand or identify higher probability fair value gaps. I'm guessing you already know what they were, but that is just for the beginners. Let's get into the real video. So higher probability fair value gaps is whenever we are going to take an old high or an old low and we displace lower. Displacement is fair value gaps. Fair value gaps are displacement. So if we take a look right here, this is Friday's New York session open. Actually it's 8 o'clock, but as you see right here, we trade through this high with a displacement candle down and we have a bearish fair value gap. Right here we see price trade into that fair value gap just to continue lower. Where should we go on the 15-minute? We should at least come to this low, and then you let runners down to here, but going to the 1-minute so we can get a more precise entry if you do not want to trade it just based off of a higher time frame fair value gap, which is usually what I don't do. But in this case, I do like these types of fair value gaps. Whenever we have a high on the lower time frames overlapped with that 15-minute fair value gap. So in this case, we have that fair value gap, this entire thing from this low on the 15-minute chart to this high. We have a high here, meaning that buy stops are sitting there. And as you see, we have accumulation, and when that new 15-minute candle opens up right here, we trade above this old high, taking out all the buy stops, trading into that 15-minute fair value gap with displacement lower. You can take this fair value gap if you didn't take your entry up here, or you can take a starter position up here and then add on to your position, knowing that we should be trading down into this sell side low. So let's take a look at a bullish example. If we come over here, go into replay mode right here, I didn't look at what happens yet, so let's take a look. As you see right here, we trade down through this low. So we are not getting displacement through this low. That means we wait for displacement higher so we can take a reversal trade. And then let's replay this out. So right here, what do you want to do if there's two fair value gaps? You want to pull out your little fib tool, look for equilibrium and what is in a discount. So we have discount lying right here, so we should be looking to see if this one gets traded into. So here we get that traded into. If we want to scale down to the 1-minute, what are we waiting for on the 1-minute? So right here we have a bearish fair value gap. Oops, bearish fair value gap. So let's see if this wants to get traded through. Still here. As you see, wicks do the damage on most of these fair value gaps. Bodies will tell the story. As you see, we are holding this very nicely for bearish PD array. So now that we have just closed above it, what should we do? We should rotate back into this and then continue higher to at least take out this high. But you should take your first partials up here because we have equal highs. So now we get displacement higher. We never ended up trading in here. Actually, we might. There you go. You can get your buy here. Do we have a 5-minute? Yeah, we have a 5-minute right here as well. Boom. So now we are waiting to see if price wants to return to this high. Equal highs, there we go. So right there, if you took it on the inverse, that is a 30-point trade on NQ. So now, if we want to go to real time, we see on Friday, these are also my favorite fair value gaps, and you will see this happen a lot. We have an old low inside of a fair value gap. This is where you will see price attract most. If we have an old lower high inside of a fair value gap. Scaling down to the 1 minute, you can see right here, we trade down into that, create equal lows at that sell side. We take the sell side. We have a fair value gap right here. But why would we not take that? Because we have no significant high, right? This would be our significant high. This up here being displaced through. So you would not take this. So right here, as you see, we trade down through this low. So we get displacement higher. We're waiting. Finally, we get that displacement above a high. Right, now we have traded up above through a high. I would not be taking longs here, but if we go to the 5 minute, maybe we have an imbalance. Right here, we have an imbalance, bearish. So let's see if we have a 15-minute bullish. We have a tiny one right here, but I would not be longing that. So what I would wait for is this right here. We have displacement lower, creating a bearish fair value gap. Why would we not want to short this? Because now we know after this displacement higher that this should be the draw on liquidity. Up here, you always need to have a narrative for why price should go where it wants. Why would we hold this just to come down here? Also, if you know what a 3 drives pattern is, we have engineered enough liquidity to continue higher. Boom, boom, boom. We have a 3 drives pattern here on the 15 minute. 1, 2, 3. So this is what I would wait for. Wait for that to get closed above, long it, have a stop somewhere down here targeting that high up here. And as you see, after we take that high, I'm pretty sure, yeah, we rotate into a fair value gap to continue to the overall draw at 928. So this is how you can start to base trades around fair value gaps. Let's do 2 examples of going somewhere random on the chart and see if I can find the draw just based off of fair value gaps. Okay, here's our first fair value gap of the day. I want to see if this gets respected or disrespected. Okay, so it gets disrespected. We should go to this low, but we also have bearish fair value gaps, so those should be traded into. We should have returned to this low. Boom, that low is taken out. There's our first example. Let's move on to the next one. So why wouldn't we just take an entry off this? It's because we want to see the reaction off these bearish fair value gaps right there. So let's move on to the next one. So here we are, 8 a.m. No fair value gap on the hourly chart. Scaling down to the 15 minute. Here we are. We have our first fair value gap right here. So we want to see if price wants to trade into that. So it just traded into it. Right it open. So now on the 5 minute, this is when I would go to the 1 minute to see the reaction. Trade into that low. There we go. So there's 2 examples of fair value gaps. Understanding the narrative, big push higher, and then we get that displacement lower in the exact same candle. We have a fair value gap. Trade into that fair value gap. We should return to a good low that isn't too far away. Don't be trying to extend your take profits the whole way down here. Don't get greedy. Trade fair value gaps because they are the most important PD array in my opinion. A lot of accuracy with them, but do not trade fair value gaps like this right here. Do not trade it if we just took this high out. That is a low probability fair value gap. So right here, same exact thing. We just took these lows out. Wait to see the reaction on the 1 minute chart. As you see, we close above it right here. Trade into it as an inverse, trade out of it. This is exactly how you can frame trades. Hope you enjoyed the video. Join the free Discord down below. I need to go pee. I will be back with another video this week, hopefully, because I'm not expecting too much from this week. It is Thanksgiving, so maybe I'll be back this week. Other than that, I'm out. Peace.